Morning, morning, everyone. Good morning, YouTube and Trade Pros. Hope everyone is doing well. And welcome to a shorter week. We didn't have an update yesterday, but we're back at it today and into the remainder of the week. We're already halfway through the week, right? It's Wednesday. We have Thursday and Friday left. We had Labor Day on Monday, so markets were closed. There was some kind of trading in the futures, but it it closed at like 1 p.m., so there was little volume, little movement, and less volatility. Yesterday, we got an interesting move down into a key area into the futures at the 38.85 area. And we should talk. There's not too much news to talk about. There's a few different little things here. We have an Apple event that we should mention, and also coming into the FOMC. That is a big point in this month's data, I would say. So the FOMC event comes out, I believe, September 21st. Let me just make sure so I'm not lying to you guys. Let me see here. The FOMC, remember the Fed Watch Futures. I love that website. We go on it all the time because it shows us the probability of the rate hikes into the coming events. So we have, September 21st. And right now, as it stands, we're between the target rate of 225 and 250, and there's an 84% chance now an 84% chance that we are going to see that 75 basis point hike that comes out by the end of this month. So there's not that much time left into that FOMC event, right? 14 days or so. And before that, we do have the CPI inflation data that'll come out. So that'll give us a little more information on how we can see this rate hike come out. So there's realistically a fight, right? Bulls and bears right now. Market's a little more directional to the downside, but we could easily see sideways chop and some potential rallies leading into this FOMC event. And a lot of traders are still continuing to assess the data that's coming out, right? It very sorry, the Fed has mentioned that they're very data dependent, but realistically, there's going to be one specific data point, and that is the battle against inflation from the central banks. So the more positive the economic figures, the less the Fed has to worry about aggressive hiking cycles, or so the thinking should go, right? Theoretically, that is what should happen, right? But in the latest events that we've seen, right, the S&P along with major indices, yesterday they fell for the seventh consecutive day, making 7 consecutive losses, marking the longest losing streak since November 2016. So it also followed an ISM survey that showed that the U.S. services industry picking up for the second straight month in August due to increases in business activity and new orders and employment as well. So the focus now turns to Jerome Powell. His Fed speech is set for tomorrow, I do believe. Let me just make sure. So let me just make sure of this. It is September 7th right now. Well, September 7th. So we do have Jay Powell tomorrow at 9:10 a.m. September 8th on Thursday. So we're going to take a look. I think a lot of people are waiting for that, so we could see a slower session as well. After the central bank telegraphed that it would be extremely data dependent given the road ahead, and that'll bring some pain to household and businesses. Remember, this was set during the Jackson Hole. So we now see an 84% chance of a 75 basis point hike in September, up from about, I think it was like 65-ish percent just a week ago. So if we take a look at Fed Watch Futures, you can see it there. So the Fed will be surprised by growth damaged causing by its tightening. And this is what a BlackRock analyst said. When the Fed sees this pain, we will think it will stop raising rates, but it'll be too late to avoid contraction in the economy activity by then. So we think the decrease won't be deep enough to bring the PCE inflation down to the Fed's target of 2%. And that is a huge deal. We think that inflation back to central bank targets means crushing demand with a recession. So that's bad news for risk net assets in the near term. That's also one of the main things that we do have to understand, that there was never a point where inflation was so high that the Fed's funds rate was not higher than that inflation number without causing a massive downshift and a recessionary action. So that's one thing that we have to take a look at. And I do believe it is next week, if I'm not mistaken. Next week, we do have that CPI and PPI data. That's going to be very, very interesting to note. On Monday, we have that CPI data that comes out at 8:30 in the morning. And then on Wednesday, we have the PPI data that comes out at 8:30 in the morning. So those two inflation numbers, inflation-based numbers, are going to give us an insight on naturally what areas of the economy have experienced the most inflation or have dropped off, and how we're going to go forward with these Fed hikes. So right now, priced almost at 85% of a 75 basis point hike. We also have Apple, right? That's one of the main things that we have in the news. Not too much news today, and Apple's. It's going to be interesting to see because excuse me, Apple is again the largest market cap right now. It does sway price movements in the overall market, and it's going to be interesting to see how this event unfolds. It's set to host its first product event of the fall, where we can see that there's going to be unveil of a large degree of products, including updates to 3 of its most popular product lines. The iPhone 14 is expected to be the star of the show, and Apple is likely going to show off 4 new versions of the smartphone, the 6.1, 6.7 inch models, and also the 6.1 Pro and 6.7 Pro Max models. So some analysts have forecasted the Apple 14 Pro and Apple 14 Pro Max to see a $100 price increase over last year's model, starting at $999 and $1099 respectively. So we'll see how that shapes up and how the demand and sales figures also roll out. That's going to be the most important thing to see. Apple's Pro models have been a big driver, accounting for 54% of the revenue since 2020. And when the company announced its first 5G capable devices around the world, 5G penetration is still low. So according to CEO Tim Cook. So I think there is going to be reason to be optimistic. Wedbush Securities has also called the unveiling of the new iPhone family another pivotal moment, especially in light of weakening global economy, while reports suggest that the company could announce a new subscription plan that lets people pay for their devices on a per month basis. So we'll see how that shapes up naturally. In addition to the new phones, we also expect to have better cameras, video, and processors, and Apple's expected to unveil its new version of the Apple Watch, including one that is geared more towards sports enthusiasts. So the new wearable, which is likely to compete with the Garmin. So it's a pretty big watch in the active industry, if you will. I know a lot of my friends have Garmin's that do whatever kind of activities like swimming, running, all that stuff. So it also have a larger display compared to previous watch versions, as well as a longer battery and a titanium casing. Now the battery, I do have an Apple Watch myself, and the battery is underwhelming to say the least. It doesn't last very long, and that's kind of disappointing out of a Apple device. But realistically, right, we're getting all these new Apple devices. Are they going to be that different? Probably not. Realistically, I'm probably going to stick with my stuff right now and not get the new iPhone or Apple Watch. Let me know in the comments what do you guys think about that? Are you gonna drop realistically over probably like $1,500 minimum for that new iPhone, right? The Pro Max starts at $1,100 pretty much, and this is in US. So let me know what you think. We're also going to see there's speculated unveiling of new wireless earbuds, right? The AirPod Pro 2s. So we'll see how that shapes up. Realistically, a lot of people are probably going to buy these things, even with these inflation figures up and this economic downturn. I don't really see a lot of people stopping to buy Apple just yet, even though it's pretty much the same products. And we'll see how that shapes up in the stock, how the stock moves, because that's going to be a pretty big driver in the overall SPY and S&P futures. So we'll see how this shapes up and where we go from there. So some questions: why is the market so choppy? There's not that much volume. We're waiting for some of these events right next week. Well, we have Fed Powell tomorrow. So I think people are going to wait for uh, him to see what he says. We also have a short week, right? We have 4 days of trading this week. We're on the back of Labor Day. I think people are still rolling into work. I think next week, the week after, we start to pick up some of that volume and start cutting out some of this choppiness. Next week, we also have the CPI. So a lot of people are going to be waiting for that to see how that shapes up into the economic news. And then the week after, or is it the week after? It's not the week, or Yeah, the week after next, we have what do we have? We have the FOMC, right? So a lot of events here that are shaping up and wait, and a lot of people are waiting for those to bring more decisiveness in the market. And realistically, after next week, I could see a little more directionality. So we'll see how that shapes up. So I hope everyone is ready for the day ahead. Not too much news today. Let me just take a look at these futures here really quickly and give you guys some levels. A very key level in and around 3900, 39002. I'm going to use that area, that region, maybe a 3-point area as a pivot to see if longs can take this thing above. If longs do take this thing above, we're realistically going to be looking at that 1617 area, maybe even a little higher, right? 16 to like 18, I would say. We're going to be looking for that area to the upside, and then naturally that 30 and that 40 to the downside. The huge level 3885, 3885 to 3887 in that region. We're going to see if the longs manage to hold that out. If we don't, right, there's going to be a large slip, and we're going to see movement into that 3850 is going to be a target for today to the downside. So we'll see how this thing shapes up. Realistic, I'm not expecting too much, probably a choppier session today, kind of sideways movement, as we expect Powell to come on tomorrow and more data to roll out next week. So with that being said, let's open up these trading rooms and we will see you guys in there. I hope everyone has a great trading day. Take it slow and steady, especially this week. It is going to be a slower week, and let's see what we get. So I'll see you guys in there, and we'll chat tomorrow.